You've heard people refer to Bitcoin as digital gold and wondered why. Stick around. By the end of this video, you'll understand the similarities between Bitcoin and gold and why this comparison makes sense. Let's begin.
First, let's talk about scarcity. Gold has been treasured for centuries because it's rare and hard to find. Similarly, Bitcoin is limited in supply. There will only ever be 21 million Bitcoins, making it scarce like gold. This limited supply creates a sense of value and rarity, driving demand. Next, let's discuss the concept of a store of value. Gold has long been seen as a reliable store of value. It doesn't corrode, and its value has remained relatively stable over time. Bitcoin shares this characteristic. Despite its volatility, Bitcoin is increasingly viewed as a store of value, especially in times of economic uncertainty. People see Bitcoin as a way to preserve wealth, much like they do with gold. I see the main difference here is the Bitcoin network needs people to keep machines running to operate, while gold can sit wherever people prefer to hide them. Now, let's consider decentralization. Gold is a physical asset that isn't controlled by any single entity. It's mined and traded globally. Bitcoin operates on a decentralized network, meaning no single organization or government controls it. This decentralization is one of Bitcoin's core strengths, making it resistant to censorship and manipulation, just like gold. Another key point is the hedge against inflation. Gold has traditionally been used as a hedge against inflation. When fiat currencies lose value due to inflation, gold often retains its value. Bitcoin is increasingly being seen in the same light. With governments printing more money, people are turning to Bitcoin as a hedge against inflation, protecting their purchasing power. Let's talk about portability. Gold is valuable, but it's heavy and difficult to transport. Moving large amounts of gold requires security and logistics. Bitcoin, on the other hand, is digital. You can send and receive Bitcoin anywhere in the world with just a smartphone and an internet connection. This ease of transfer makes Bitcoin incredibly versatile compared to physical gold. Security is another crucial factor. Gold requires physical security. It needs to be stored in vaults or secure locations to prevent theft. Bitcoin, while digital, also requires security measures. However, these measures are often digital, such as private keys and encryption. When properly secured, Bitcoin can be stored safely without the need for physical protection. The only exception is when we want to physically store our private keys in a physical wallet. Now, let's discuss divisibility. Gold can be divided into smaller units, but it's not practical for everyday transactions. Bitcoin is highly divisible. One Bitcoin can be divided into 100 million smaller units called satoshis. This divisibility makes Bitcoin practical for both large and small transactions, giving it an advantage over gold in terms of everyday use. In addition, let's consider the growing acceptance. Gold has been accepted as a valuable asset for thousands of years. Bitcoin, while newer, is gaining acceptance at a rapid pace. More and more businesses are accepting Bitcoin as a form of payment, and institutional investors are adding Bitcoin to their portfolios. This growing acceptance is a strong indicator of Bitcoin's potential to be a long-term store of value, much like gold.
Leave a comment below with your thoughts. See you around at Asset Tech. Thank you for watching.